Hey everybody, we just want to welcome you back to another one of our Mortgage Minute videos. I've got Marc Trejo here with me as Sun American Mortgage. And Marc, thank you for joining me for another one of these. It's super fun as always.
Thank you for having me. Looking forward to it. Always fun.
Yeah. Okay, so like I told you guys last month, we're starting this new series with our lenders where I'm asking them some of these questions that we should be asking our mortgage professionals. So I have got two questions. I've got one question for Marc today.
And it's always dangerous. It's always dangerous asking the lender. Asking the lender any questions. Always
That's
dangerous.
Right. Ask the lender any question.
We don't allow that anymore.
Yeah. So these are good questions. So, but this question I'm asking you today, Marc, is like one that I don't think we talk about very often. It's I feel like it's one that prior to the Great Recession, maybe we talked about a little bit more, but things have really changed since we had that whole kabacle with mortgage and lending and housing and all that kind of stuff. And so I think this is a good question to revisit because we're starting to see some of these loans coming back, right?
Sure.
Well, yeah. So so here's the question, Marc. You ready? All right.
Ready.
Marc, what is the difference between a fixed rate and an adjustable rate mortgage, and why do we care?
Sure. It's a real simple answer, and then you go more detailed. So that the simple answer is fixed rate. Let's say you have a 30-year mortgage, your interest rate's not going to change, and so it's fixed for that entire 30 years. And so to break that down even further, your mortgage payment's broken into generally principal, interest, taxes, and insurance, and then you got other things, but that's the four general types. The principal and interest portion of that payment will not change because that interest rate's not going to change. The only thing that's going to change is the allocation of what goes to principal and what goes to interest. So the only time your mortgage payment will change through that 30 years on a fixed rate is if your property taxes changes or your home insurance changes. Then your escrow portion changes of that payment. But otherwise, your payment stays the same. The adjustable rate mortgage, it depends on the product you're in. Those are referred to as ARMs. There's 1 year, there's 3 years, there's 7, there's 10. There's probably even a 5, and so you pretty much find one that fits. What you're looking for. The difference these days with those is the rates used to be advantageous to do it, and in my opinion, up to this point right now, they haven't been to do it. It's just not worth the risk of my rate going up after 12 months, 36 months, 60 months, 72 months, or whatever it is. And typically those have a cap of how much they can go up, but that cap can be pretty high at the same time. And when you're faced with some of the things that we're potentially faced with, like inflation and some other things, I would hesitate to look into an adjustable rate mortgage in this type of market. And I hope, to ultimately answer your other question, I hope we don't see too many come back, because I think that's a big part that led us down a bad path back in 2006 and 2007, leading up to 2008 and 2009.
Yeah, I remember, interestingly enough, we would get faxes and things at our previous business where they're like, hey, 0 interest rate for da-da-da-da, and I could get like $1 million for like $800 a month.
Yeah.
And I was like, really, what? But what we found was that a lot of those people who thought that was so sweet and so great jumped into that stuff. And then 3 years, 5 years, when it adjusted, all of a sudden they could no longer afford what they had. And that's why we saw that huge, and then the values of houses, it was like the perfect storm. Values of houses like tanked. Then their interest rates were readjusting and their payments were readjusting. So they didn't even have the equity in the house to get out of it. So now we had all these short sales and foreclosures, and it was a mess. It was such a mess.
We're in a dangerous time right now. I kind of equate this, just my own simple mindset, I kind of equate this to be about 2004. Think where we were in 2004, where values were really high, and we were just starting to see some of the things that we're starting to see now, like inflation, like gas prices, like high food prices, all these things that are starting to creep in on us. So if we start to see some of these other products and people start justifying getting into them, saying, I can afford that payment now, and I think I can afford it 3 years from now. You know, that's where we get into trouble, where people don't make that decision based on, no, I can afford that payment now and I have no issue affording it 3 years from now already. And so it's a dangerous time that we're getting into, and we just kind of, you know, I know me, I try and be more an advisor and just really ask people the question of, are you thinking about this? And are you looking down the line, and are you anticipating the worst case scenario and those types of things? And that's really what you have to do if you're considering an adjustable rate mortgage. You have to know without a doubt that you can handle the worst case scenario of what's going to happen, or you're going to get into trouble.
Yeah. Yeah, I think what a lot of people, probably one of the biggest problems back in the day before the recession, was speculation. And
Sure.
just like you said, you know, people were speculating on, well, I'm going to buy this house and then turn around and flip it and make all the money back, and I'll never, you know, and then crazy stuff happened that they didn't anticipate, and there they were in trouble. I mean, I remember people with like 5, 6, 10 houses that they were either speculating to flip, or speculating to have the renters, and then they were going to refinance them, and then all of a sudden the market crashed and they couldn't refinance anything. And
Right.
like it was a lot of speculation. And I think when you, and I'm going to call it gambling, when you
Right.
gamble, you run a really good risk of losing. And so yeah, I'm with you when we're advising people, when we're counseling with people, when we're guiding people. Let's not play too big of a risk, you know, like,
Right.
yeah, there's a calculated risk. There's, you know, nobody can guarantee what tomorrow holds, but I've got a really good job right now. I feel secure in this job. I feel like, you know, I'm going to be able to make this money for the next 5, 10, 30 years, whatever. So I feel pretty good in committing to this and knowing that I can do it. But yeah, when you start gambling, you're almost bound to lose at some point.
It's tough. I mean, you think about a fixed rate in the high twos. I mean, thinking 30-year, something in the high twos or low threes. And if if you can't feel comfortable locking that in and affording the payment, then let's rethink our price range. And
yeah,
we just can't sustain this level of equity building. We can't sustain this percentage of increase, 100,000 over 6 months, or even more than that in some situations. It's not sustainable, and I think we're already seeing that in the economy, that things are starting to break, and people can't handle the price of goods and inflation and those types of things. And so ultimately it's going to have to correct itself, whether that's a downturn in prices. I don't think we're there, but it's just a matter of it calming down, you know, and that level of equity doesn't build as fast.
Yeah, and that's exactly what we've been seeing in the real estate numbers. So hear us loudly, everybody. Your house is not going to lose all its value overnight.
Right.
But what we are starting to see, and what we do expect to see, and when we say a correction or a shift in the market, this has got to slow down.
Right.
Like, you just can't keep flying along at, you know, 800 miles an hour. So we're starting to see things slow down a little bit. The buyers, because it's still that supply and demand question, right? We're still a lot of demand for not a lot of supply, but we're starting to see that demand lessen for all the reasons that you just said: inflation, the cost of everything else, you know, like all that kind of stuff. So it's not directly housing, but it's going to affect everybody's ability to what they can afford and what they feel comfortable with and all that kind of stuff. So we are starting to see the buyers going more cautiously right now, because oh my gosh, you cannot beat these interest rates, but that doesn't mean that you want to spend the max of what you possibly can because of all the other reasons.
I'll tell you what, I mean, this fall and winter may be a prime time to buy, just because of what you just said. We are seeing less buyers. I mean, I don't have any first-time home buyers really calling, very little, you know, just because they feel like they're priced out of the market and their offers don't look as good on paper as someone paying cash or anything like that, 30-40% down payments. And if you're not having to buy right now, there's a lot of people saying, I'm going to hold off and just see what happens. And so this fall and winter may be that prime time for those buyers to step back in and take advantage of what hopefully is a little more inventory.
Yeah. And if people are my friends on my personal Instagram and Facebook page, you got to go to my personal one, not my business one. I've been doing these car chats with Katie and one that I recently did. So in fact, if you're watching this in the future, you'd have to go back to August 17th. is when I filmed this one, but it's about the 9 things that you can do to prepare yourself to either enter back in to purchase a home or get ready to purchase your first home or whatever. But there's 9 things, and a lot of those would involve you, Mark.
Great. Love it.
Yeah. So go back and watch that, or let me know, and I'll send you the synopsis of it. But yeah. Okay, Mark, I think that really helps people. You know, I with first-time home buyers who are transitioning from that rental market into their first-time purchase, or somebody, they got hammered in, you know, the housing slump and is re-entering again. I like to remind them that a lot of times, if you're prepared and if you're doing the right things, what you're doing is, I mean, consider it kind of locking in your rent payment. That's
Sure.
why this fixed mortgage rate is so great. Like you said, there's a couple variables, but they're not going to like be thousands and thousands of dollars.
You're talking 20, 30 bucks a month tops.
Yeah.
You know, that type of stuff. Tops.
Yeah.
That's even on a high end.
Yeah. And so, you know, this really is a matter of like locking in your rent payment, and not only just locking in your rent payment, but building equity in something that you have ownership in. And you know, it's historically been a great investment, real estate. And so, you know, kind of dig in, do some homework, look at what you got going on. But if you have the choice between a fixed rate and an adjustable rate, I'm gonna always advise towards that
fixed. Fixed all the way.
Fixed all the way.
Where I stand. That's where I stand. I struggle advising people to go adjustable. It just doesn't make much sense to me.
Yeah, I agree. Well, Mark, thank you so much for joining us on this Mortgage Minute video. I appreciate your wisdom and your advice, your counsel, and all that you do for me and my clients. And if somebody wants to get in touch with you, Mark, what's the best way?
Sure. My cell is the best. You can call or text. That's at 602-743-4885.
Awesome. And you guys, if you didn't write that down fast enough, as always, you can head over to our website, which is www.living48realestate.com. Go all the way over to the more, down to the preferred vendors, and you will find Mark under our lender category. And yeah, he's wonderful and always a resource for me and for my clients as to with any questions at all. He's
happy to help anytime.
Yeah, he's here for the long haul. So reach out to him and ask your questions, and he will give you the time that you need and the help that you need as well. So Mark, thank you again. And everybody, we'll catch you on our next Mortgage Minute video. Bye.
Thanks, everyone.